Hello everyone, and welcome to this panel titled Proving You're a Safe Bet, How to Get the Cyber Insurance Your Business Needs. I'm your host, Charlotte Jupp. I'm Head of Security Performance Management at Panaseer, and I help our customers understand what metrics and measurements to look at to analyse their cybersecurity risk and to gain things like cyber insurance and to fight and mitigate against ransomware. Today, we're going to be discussing the state of the cyber insurance market and how security leaders can navigate this complex landscape. I'm joined by our panelists, Nathan Hankin and Sean Martin.
Pleasure to be here.
Thank you.
Likewise, thank you.
So Nathan, if you'd like to say hello, introduce yourself.
Yeah, no problem at all. So hi everyone, my name's Nathan Hankin. I'm a senior cyber broker at Aon. I typically look after the mid-market, which we consider 100 million to $1 billion in revenue across all sectors, and help arrange insurance policies for them on a daily basis.
Thanks, Nathan. And Sean?
Absolutely. So I'm Sean Martin. I'm the co-founder of ITSPmagazine. We have a network of podcasts where I run one show in particular, Redefining Cybersecurity, where we look at how to operationalize cybersecurity in business. And we have a bunch of other shows that we talk about everything from space to technology and humanity and STEM, all kinds of things. And cybersecurity is something that I've been involved with for 30 years, and cyber insurance is something I've written about when I used to write for Dark Reading and Tech Target and those publications. Things have changed since those days. Not many people got cyber insurance, and if they did, it was viewed as a backstop in many cases. And I think the times have changed, and with that, what's offered by brokers and insurers has changed, and how companies interact with the brokers and insurers have changed as well, which I think is what we're going to talk about today, right? So what's changed, and how can you embrace the change to show that you are a safe bet and have done the right things so that you can get coverage and hopefully never have to use it. So let's kick it off. I'm gonna drive this conversation today. So thanks for trusting me with the mic for that. And Nathan, I'm going to turn to you. So just so everybody's aware, I come to this conversation with the perspective of a journalist and somewhat of an analyst, and I get to talk to a lot of people on and off screen and in front of and behind mics, and I get a lot of insight into what they're struggling with. And cyber insurance is one of those topics that I've heard come up quite a bit recently in the last few months. The ability to get coverage or the inability to get coverage at premiums that are acceptable. And Nathan, I think there's some stats. What is it? 82% of cyber insurance expect that the premiums are going to rise even more than what they are now over the next few years.
Yeah, so it's quite an interesting period altogether. Would you like me to just sort of run over the changes that we've seen in the past 2 years?
That'd be great.
So to give everyone an overview of what's been happening in the insurance market, the first thing to note is that cyber insurance is still pretty much in its infancy. It has only been around for about 25 years. Now, although 25 years sounds like a lot of time to some people, it's really not in terms of insurance. And the thing with insurance is that it's always last to the party. So, for instance, the Great Fire of London happened. Couple of years later, fire insurance was introduced. Now, cyber's in a similar state. So it's been around, as I say, for 25 years, but people only really heard of cyber insurance come 2016 when we first heard about GDPR. And a lot of people referred to it, or a lot of SMEs referred to it as GDPR insurance, which obviously wasn't true because it covers so much more. But in 2020 and 2021, effectively insurers saw an unprecedented amount of losses. In 2020, obviously with COVID, a lot of people started working from home, and with that brought its own challenges. No MFA for remote access, employees were using their own devices, and it still scares me the amount of people that haven't got antivirus on their tablets, phones, and laptops. So this brought a load of claims and challenges with that. Then in 2021, the stats that Aon produced shows triple digit growth, and we're talking 200 to 470% increase month on month when comparing Q1 2019 to Q2 2021. And with that brought a lot of full limit losses. Now, the reason why there were full limit losses was because insurers were having to pay ransoms. And again, we can have that interesting conversation. Is that morally right or is that wrong? But when you're facing with an organization that may turn over 100 million or a billion and it employs 1,000 staff to 8,000 staff, what do you do if your ransomware controls are weak? So that could be multi-factor authentication. Most important is obviously backups. So a lot of clients still don't have cloud-based solutions that are designed with that, with protections in place, such as multi-factor and other controls. They don't have immutable backups and they are connected to other IT systems, or they don't have offline storage backups as well. So, in the event that they are compromised, and they were compromised more often than not, insurers were having to pay ransoms, which have increased substantially. I'm sure Sean, like myself, you'll remember when a ransom was $25,000 to $100,000 or pounds, and that was seen as substantial. And now we're looking at an average of $1.2 million in the last report that I read on average as a ransom request. So all of this, before you even start paying a claim, and you talk about the coverages, so IT forensics, legal, PR, etc., data restoration costs, notification costs, third-party liability, and so forth, that really drove up the claims landscape. Then what happened was last year, the insurance market went through a stability phase. Now, a lot of people were calling this a hard market, but unfortunately, that was an incorrect comment to make. In a hard market with insurance, it's usually led to a claims trend, premiums will go up and they will come back down. Premiums that are out in the market now will not revert to what they were like in 2019 or 2020 because of those huge losses that they have suffered. Insurers also had to increase excesses or retentions. My rough rule of thumb is 100k excess per 100 million of revenue. We also saw insurers making amendments to ransomware cover, again, looking at the controls on the proposal form and ransomware supplementals. If the controls weren't there or they weren't in place, insurers would look at restricting ransomware in its entirety or co-insuring it with the client or sub-limiting it. But insurers were still offering some full limit covers as well. Then the capacity in the market, insurers were reducing their line size. So where they may have previously offered 10 million, they only reduced it to 5 or to 3 or to 2. And in Q4 last year, we actually saw insurers not offer quotations for new business at all. But I'm happy to say, Sean, it looks positive. So
Sounds
BC,
positive.
well, so it looks like the stability phase last year. And I guess another thing to touch on is MFA was a key control last year, and we can have that conversation as well in a moment. And the simple advice I would give is no MFA, no cover. And when I say no MFA or no cover, I'm talking about multi-factor authentication on admin and privileged accounts, both for remote access and on-prem, for cloud solutions, for ERM systems, and then obviously email, Office 365 and that type of thing as well. Which meant we did see a lot of insureds have to step away from the insurance last year and go back to what we call the road to insurability or the cyber loop. But many clients are returning, but you're right, premiums did significantly increase as well. And we did see increases anywhere from 50 to 1,000%. And that was typically aimed more at the manufacturing side of things because they were being hit left, right, and center. Data heavy risk exposures or technology companies as well.
And before I jump to Charlotte, I want to pick your brain once more on this, Nathan, because a lot of this was around premiums rising and fewer bids being put out to folks, right? So new business being cut short. And you briefly touched on some of the other elements in terms of capped limits or sublimits or exclusions or clauses. How has that changed, and how do organizations kind of embrace what those look like as they begin to look at the controls and engaging with brokers and insurers?
So it's been a really interesting period last year working with organizations of all sizes across all sectors. But I really do think that the insurance industry are driving good controls. Now, I refer to them as the 12 minimum insurer controls because they don't necessarily follow any framework. You know, they will be included in NIST or ISO or everything like that. But the insurers are saying, hey, this is where we're seeing claims from. We want to see these controls implemented if you want the full limits of cover. And actually, it has been quite received well with CISOs and other IT professions that say, do you know what? We have been asking for that control for a while now. We've been trying to get budget, or we've been trying to put it on the roadmap, but we just either haven't had the time. But now the insurers are almost driving those good controls. So depending which insurer you ask, there was a report in 2021 that said 85 to 95% of claims could have been avoided had multi-factor authentication been installed across the areas that I just mentioned previously. Which is obviously huge. So just something so simple as MFA. And I think it's really good to see that banks are doing it now. So you have to do that authentication when you're making payments. Uber Eats, when I went to collect food the other day, I had to give a 4-digit PIN to the driver. Now, the geek in me said, do you know what? That's really good. I actually really like that. Here we go. And it's helping that younger generation as well that will be using those type of apps understand. And even universities now and education sectors, they're having to implement multi-factor authentication on students' email accounts. But how I've been selling it to those when I've gone and done a talk for the younger generation is focus on your Instagram account, focus on your Facebook account, make sure that it's got multi-factor authentication so your friends can't hack it, other people can't gain access, and your Uber account. So it's all just trying to make sure that we can teach that younger generation now these key controls to try and help them later on in life as well, I think.
And of course, there'll be employees somewhere, right? Driving
Yeah,
some
exactly. Yeah.
some activity. And Charlotte, all of this change, and I've, like I said, I've had a lot of conversations where CISOs used to talk about, or used to be able to get multiple bids and pick the best option that provide the best coverage at the lowest rate. And they were able to have that loose conversation to make that happen. There's less opportunity now to secure a policy. And I guess my question to you is, how have the conversations changed for you as you work with customers? Because I see it as we've moved from security was a thing, and then compliance had to drive security to do something, and then privacy drove security to do something, and now we're perhaps seeing insurance, cyber insurance driving companies to do something. You can't get the coverage if you can't prove that you're a good bet. So how has this changed the conversations you're having with your customers as they engage with deploying controls, measuring controls, reporting on controls, so that they can actually present that to somebody who cares?
Yeah, so that's a great question. There's lots of parts to that, I think. So firstly, I mean, it's shining more of a light for them on the challenges that they probably are facing day to day on deploying controls, understanding their good coverage, having to turn around to other parts of your business and say, we're struggling to get cyber insurance as a result of not having certain controls in place. It just adds more, I guess, fire to that ammunition when they're talking to different parts of their own internal organization. But I guess the challenges we've seen are just echoing what you said before. I think ransomware claims have been going up and up and up, and I think 80%, over 80% of cyber insurance claims are as a result of ransomware. And then it's like you said, over 80% of those ransomware claims would have been prevented if best practice had been followed. So whether that's multi-factor authentication, good endpoint coverage, making sure your kind of EDR tool is there deployed across all your estate, or then looking at your kind of backups. Are they on a segmented network? How quickly can you recover? And the challenges we're seeing is that cyber insurance is that the customers just don't have necessarily the confidence when they're filling in their questionnaires that the answers that they're giving are kind of wholly accurate, or maybe that they'll stay accurate as time progresses. So how can they maintain that what they're kind of stating at that point in time when filling in the questionnaire is going to be continued as time goes by? And it's lots of different parts of the organization that you have to go out and question when you're trying to get answers to these cyber insurance questionnaires. Some sit within kind of IT ops, some might sit within SecOps, because of the range of controls that organizations or cyber insurance firms are coming to ask you about across your organization that can obviously help mitigate against ransomware attacks. How well deployed as your ETL tool? Are you testing all your people with phishing tests or other user awareness training? Are they prepared to kind of prevent your organization from being breached? And so gathering that information is taking a lot of time. It's like you said before, maybe you had the pick of quotes. Now you've maybe got 2 organizations that you're talking to, so you haven't got many opportunities to kind of get it right. And what we're seeing is that insurers are either offering kind of shorter coverage, or they'll offer longer coverage if they have greater confidence in the controls that you have in place, or the monitoring that you have of those controls that you have in place. They might be willing to extend the amount of time that they will cover you for business continuity disruption if they think you're doing all you can to manage and monitor your estate. So these are, I think, different ways then that CISOs, security teams can be presenting that information to the board. It helps them understand kind of the importance of certain controls that you have in your environment, how the effects they have in mitigating against ransomware attacks, and then particularly how you start directing your spend as an organization to make sure you're spending in the right places to reduce your risk. Well, firstly to ransomware, also to get your cyber insurance, to get the opportunity to do that. And if you can't do that, then how are you self-insuring yourself? And again, where is your biggest risk lying inside your organization?
Yeah, and I'll go for it, Nathan.
Oh, sorry, I was just going to say, you touched on 2 good really points there quickly. The first thing as well that the insurers have done over the past couple of years is really invest in, instead of just having underwriters, because we all saw the 2-3 page props all those years ago for those 10 million limits, etc. And now for anyone that's filling in those forms, they're at least 8 to 16 pages long. They've really invested in a technical team. So a lot of the insurers have got technical individuals that are sitting down side by side with the underwriters, and they're also heavily invested in different scanning tools. So Kind, BitSight, Corax, 3 of the main ones that insurers use. We've actually got a few insurtechs coming over from the States now in Q4 this year, which is good, and again shows positivity within the market. So we've got Coalition and Resilience that have got the technology behind them, their own scanning capabilities and everything else, obviously non-intrusive for anyone wondering, but it's just a bit of extra insight into the risk. And a lot of the time, yes, these reports can give up false red flags and etc. But we have had open ports or CVE vulnerabilities that have been identified from this scan that clients haven't been aware of. And insurers are actually starting to share licenses for those scanning tools as well. So insurers are really starting to give back. And another thing they're really doing well is additional services. So if you do have a cyber insurance policy, do take a look and see if you're available, if there are any additional services available, because there's training, there's discounts with vendors. So FireEye, Symantec, CrowdStrike, there's a load of discounts with different vendors. Know Before, they all seem to use Know Before, and they all seem to give around a 25% discount. Some do offer more. Some are offering password managers, and all of this is at no extra cost. So actually, it's already included within your premium. And what I'm saying to clients is you really should be grabbing that with 2 hands, because you're paying for something anyway. AIG's offering is, that really is ahead of the curve. They could put an artificial intelligence system within your organization and give you the full license for a year. And that's meant to be about the value of £30,000. And it's applicable for any client spending over £10,000. Well, £10,000 is really easy to do now. So just, even at that lower end, just take it, install it. And yeah, brokers as well are doing the same. So I've got my CISSP. It's the start, it's the small start, but it's things like this. We are thinking about it. And obviously Aon are very lucky. We've got Aon Security. We got Stroz Friedberg, part of Aon. But it's about me spending time with those guys as well. So I've got my whole team that are doing the cyber broking day in, day out, and technology risks. And we sit with those teams and we learn, and what are the new threats and what's in the news, and let's take a look at everything like that. So yeah, definitely we are looking to improve and help with that.
And I know my sense is it's become, as you kind of pointed out, more integrated, and a deeper understanding by all parties, and perhaps even more conversations between the parties, less of slinging spreadsheets and questionnaires around and hoping for the best. And I think that what you pointed to, though, Nathan, is kind of a level set bar that says you have to at least jump this hurdle with some of the basics to even get a nod that we're interested in working with you. What are some of those basics? You pointed out MFA. I have ideas, but I want to hear some of the basics from you, and then perhaps Charlotte can jump in with how companies can actually demonstrate that those basics are in place.
Yeah, no problem at all. So what I created very early on last year to try and send to all our clients as soon as possible was what I refer to as the 12 minimum controls that insurers are looking to see. So multi-factor, as you mentioned, is number one. Number two is focusing on PAM solutions, or password and access management, because that's definitely something that insurers are keeping an eye on, and something that AIG are really hot on, but not necessarily everyone at the moment, is service accounts. So AIG saw a significant amount of claims coming through service accounts. And actually, if you have any more than 5, it's a real concern to them. And they have looked at withdrawing terms or covers. But obviously, they will take a look at the controls that you've got around it. And their form does really well in addressing that. But service accounts is definitely something that in the future may become a bit of an issue. So it's just making sure that they are managed, that people are keeping an eye on them. And then, yeah, the second thing to focus on, and we previously sort of touched on, EPP or EDR solutions. So the insurers understand that obviously EDR is the way to go, but now you've got XDR and MDR and what everything are. But they understand that a lot of people are still in 3-year contracts for EPP and will be grading up to EDR. And they will expect to see that, I think, by 2025. And I think there was a report by Gartner saying that they did expect EDR to be in most organizations, or a good majority of sort of mid-market organizations within that time. The other thing to think about is end-of-life systems. So obviously, everyone would prefer, including yourselves, no end-of-life systems. But if you do have those end-of-life systems, are they segregated from the main network? Do they remain offline? And are they protected behind firewalls? Network segmentation and system segmentation, again, a massive thing for insurers at the moment, just to give you all a heads up in the manufacturing sector. OT and IT, and making sure that they're separate, because that's what's led to a lot of claims within that industry. Not an easy thing to do, is very specialist, and obviously there will be some connection at some point, but the insurers want to try and see that if a ransomware is opened up in the IT environment, that it's not just going to spread and stop that operation technology in its tracks.
I'm gonna pause you, Nathan.
Sorry.
Is there one or two more that you want to highlight? I don't want to go through all 12 here today.
Yep. Oh yeah. Sorry.
But
Yep.
maybe
No
one or
problem at all.
two, and then I'd love to get Charlotte's input on. Okay, so how do organizations actually procure and deploy and measure that they're actually doing those things?
Yeah, no problem. So the other two I just mentioned, so your backups, as we've touched on already, and in your business continuity plan. I think what's really important, and to say to those that are on the call today that might not have cyber insurance in place, cyber insurance is really just an award-winning business continuity plan with a pot of money. And even if you don't purchase that, you can mirror that cover and set it up yourselves. You just have to think in depth, and it will obviously take a lot of management, because you'll need to put certain retainers in place. If you think about a data breach, it's not just the notification costs, it's what happens when you send those letters out or those emails to people say your data's been compromised. Do you need a call center? Or for modern businesses, it's thumbs or fingers on keyboards to answer those emails or instant messages that you might have. And it's about building that out in your business continuity plan and making sure that you thought about that. But yeah, the advice is that you can, replicate what an insurance policy does. It's just going to be the business interruption section that is actually protecting the balance sheet that is going to be your real issue.
So then maybe to jump on, what was just said there. So as Nathan mentioned, lots of controls across lots of different parts of infrastructure, lots of different kind of focuses. So how does an organization manage those? But importantly, not just declare at the point of the questionnaire, they're in place, but actually know that they're working and know that they're continually working over time, because it's one thing winning the insurance, but you also want to keep protecting yourself from threats such as ransomware over time. You don't want to have to call on your insurance. And so what we are seeing as customers understand kind of the way to do this is automation. It's bringing that data together all in one place so that you're not in that siloed infrastructure, and understanding kind of as a whole where your risk lies and what risk you need to mitigate first. So connecting to all the different data sources that you need that supply this information, bringing it together, consolidating it, and then using that to understand firstly, well, what assets are sitting on your network. Something you have to declare in your insurance questionnaires is how many devices do I have? How many people do I keep data on? Is that accurate based on what you think versus what your security tools are telling you that they're seeing is sitting out there in your network? So what assets are there?
So I was just going to say, with the number of records, just to let you all know, that isn't defined by the actual insurers. That's the actual information commission officer, or in the event you have a data breach. So when you have that data breach, the first thing the ICO are going to say to you, remember you've got to start this negotiation and report to them within 72 hours, is you've had a data breach, no problem at all. How many subjects do you think have been breached, or what potential size are we looking at? And if you turn around and said, well, we think it's roughly 50,000 records, they're going to say out of how many? Now, obviously, it's out of 100,000. It's a serious breach for itself. If you say out of 10 million, it's less of an issue. But that question is actually driven from there and not actually insurers. I just thought that's worth, because everyone always thinks it's the insurers trying to be awkward. It's not. It's going to be the ICO sitting there asking you that question. And obviously, if you can't give them a rough estimate, and again, it's not always going to be spot on, it's going to be somewhere between 9 and 10 million, or 10 to 20 million. But the insurers want to know, because obviously notification cost per individual, when you can look at the IBM report, for example, how much it costs per record, all of that is going to reflect on your limit, and obviously the limit of indemnity that they're putting out. But yeah, overall, if you don't have good data control and you can't give the ICO that information, that's going to make them question the way that you collect data and the way that you look after their data. And that can obviously very much change their opinion of the organization or the tone of the claim immediately. So sorry, I just thought it was worth chipping in.
No,
Sorry.
great. I think it's a great point, and it proves just how important it is, like you said, to understand exactly what you're faced with in your organization, where those devices are sitting. Do you have any shadow IT out there that you don't know about, that you're not protecting properly, which obviously can then cause you the biggest problems further down the line? And then, so once you understand what you've got, how well covered are you by the tools that you have there? It's not much point having MFA if it's only on a proportion of your accounts and it's not on all of the ones that you think that it's on or applied to. And so kind of understanding what your control baseline is and how well covered you are, being able to then, I guess, justify and state that to the insurer. So something our customers are saying to us is that they think further down the line, as insurers might use third-party tools such as security scorecard, bits like, to understand where your outside risk is being seen. They might ask for proof of your inside risk. So show me the proof that you're saying 90% of your devices are covered by the vulnerability scanner, by the tool. Give us an extract, prove that to us. And then, so once you then understand how well you are covered by your controls, the next question is, well, how well are you performing against SLAs that you're trying to set against them? Are you patching and remediating all the vulnerabilities that you have in your environment within the timeframes that you're aiming for? Are you reducing that risk as quickly as you're aiming for? And so being able to look across multiple controls that sit on, applications, your externally facing applications, your externally facing infrastructure, then the business context behind that. Where does that sit in your environment? Is it kind of in some critical business units that we need to be protecting in a different way to others? Being able to understand all that, communicate that internally in terms of prioritizing the risk and prioritizing that communication with your boards or the conversations around cyber insurance and mitigating against ransomware, but also communicating to cyber insurers. That's what we've seen to be kind of the most effective, because it gives you that confidence at the start that your starting position, but then that position is being maintained or is improving as time goes on, that you have a good grip on your controls. When your renewal period comes round, that you're able to state that maybe you've got better over time, hopefully not worse over time. Giving you that confidence and that evidence is really important for our customers.
I think you touched on an important point there, Charlotte. I'm going to stay with you for this. It's not enough yes, you have to have the controls. Yes, you need to curate or collect the information that shows you have the controls in place and produce reports so you can deliver to the insurers to demonstrate that. But I think the insurers, maybe Nathan can jump in after, are looking for signs of a culture of security in the organization as well. So an understanding of what those controls mean in the context of the business that you pointed to, and being able to have a conversation of, if this incident were to take place, here's how we would respond. And yes, we have that whole response, back to Nathan's point on business continuity. Yes, we have the whole response in place as well to minimize damage, limit the impact, and get back online quickly with a little issue with our customers and our partners, right? So talk to me a little bit about the executive level, the C-suite, being able to present the culture of security that sits on top of all the controls and measurements.
Yeah, so I think the really important thing we found here is elevating the conversation from a technical conversation to a business conversation. So we found, speaking with our customers and the industry in general, that boards obviously they understand business risks. They've been talking about business risks for a long time, or their performance against competitors. How are they financially performing? And so naturally, the extension of that conversation, now talking about cyber at the board level, is what is our business risk with cyber? It's not what's our technical risk. We have this vulnerability on this server that could cause this problem. It's we have this issue that this would allow a ransomware attack to get in and propagate, and this is the part of the business that would be affected, and this is why we should kind of prioritize this as something that we address. Alongside that, it allows then the CISOs, the technical team, to bring the business owners in to be accountable for their risk as well. Maybe it's some of the processes that they put in place in their organization that have prevented patching in a timely fashion, that are resisting against other parts of kind of technology improvements or changes that are being rolled out elsewhere, that we can't do it for X, Y, Z reason. And so allowing the business to understand how this is impacting their security and owning that risk as a joint thing, and then driving the improvement of risk, is something that we've seen is really important. And equally, kind of the question from the board is, how are we performing against our peers? Being able, through metrics and measurement and best metrics and measurement, to understand your benchmark compared to other organizations in a similar industry, a similar size. I found throughout my career, kind of even in previous roles before cybersecurity, everyone's worried about being affected by something that they could have stopped or that everyone else is protecting against. So understanding how you are kind of protecting yourself compared to your peers, and making sure that, if the worst were to happen, you've done everything you can to prevent that, is something that we found is really kind of a critical conversation and critically important at that level.
Indeed, and I think that leads on to, when you talk about the cyber insurance policy and business continuity plan, is that people do just still think that it's the board and the IT, but it's not, and it's quite easy to link to that. So, for example, if you look at the incident response team, you've got IT forensics, which is your IT team dealing with them, but legal, whether that's in-house counsel or external counsel, will need to be involved. PR, as well as having the board or CEO or director of the organization delivering the message with the PR firm. You also want your marketing team there, because they are the brand, they project that. But then we also come down and, we can move across to operational managers. So if it is setting up a call center, who's going to be looking after that? We then think about HR need to be involved in the overall project because of the stress and mental well-being within the workplace. And then you have got other staff members that are going to be pulled in and roped into this. And it's not just as simple as it's an IT and a board issue. It is everyone. I think even, and I'm sure you two have a view on this, the role of the CISO has changed. And with the CISO being dragged into the SolarWinds case and Uber court case as well for their original breach, years ago, I think the role of the CISO, and a lot of the CISOs are moving on to board level as well. It really is a changing dynamic, which is, I think, brilliant. But wait to hear from you two on your view or views of what's going on.
Ah, boy, touching on third-party risk, right? That can of worms you're going to open up there. I think that's certainly, supply chain and work at, certainly in the U.S. federal government with CMMC and looking at how everything is connected. And we definitely see solutions coming to market, and they've been in market, in fact, trying to get a handle on this third-party risk. I don't have much insight into how the insurers look at third party as part of the bigger picture. I know they do. I just don't know how they're getting that information at this point.
So that's an interesting one. So I can kind of help you with that one. So on the proposal form at the minute, there are very few questions asked, but systemic risk is obviously a huge thing. SolarWinds again highlighted just the potential of this epidemic or widespread event that could bring off. and affect thousands, if not millions, of clients all at once. So I do think underwriting on that will improve greatly, and I do think that will be the next thing that they'll be focusing on. Because I know in the IBM data breach report, it was around 19% or 20% of breaches come from third parties. So again, for your good hygiene, it's, are you monitoring those third party vendors? Are you making sure that they're MFA remotely into your systems? And what checks are you doing? What controls are you asking them to have? And what I do find quite amusing is that a lot of the insureds that I'm working with now are actually using the insurance template or proposal form as a template for the third party contractors to make sure that their security does align, or that they are very similar, to make sure that they do have those controls in place, and that actually the third party they're working with does reflect the same level of security, due diligence, and like you said about the board and the ethos running through the organization, that is definitely something on everyone's mind, I think, going forward. And I'm sure that's something you push, Charlotte.
Yeah, definitely it is, and I think just kind of looking at how our customers today are implementing some of these things in their quest for cyber insurance. I think one customer that we're working with has gained insurance, but they want to make sure that they gain it next time, and so they're looking at kind of dashboards within our product that are helping them look at this automated kind of controls posture and how they're performing. And they are kind of using that to get the confidence to make sure that what they declared last time is going to be true next time, and be in a better position to more confidently answer their questionnaires next time. Another customer is going through that process at the moment where they're actually filling in a couple of questionnaires, and they're using metrics and analysis and kind of that automation to be able to very quickly and much more efficiently than they've been able to do pull all this information together and report. And then I guess the third customer we were talking to, they met with a group of underwriters, I think, a while ago, and they were saying, well, the underwriters were saying, well, how can you be confident about some of these things that you're saying? And they were saying, well, we've got this automated platform, we're bringing this data in together, we're analyzing it, we can do drill downs, we can pivot from different perspectives to look at the data to answer the questions in different ways, to make sure that we're covering ourselves, as we say. And I think for the other group of customers, there's some who aren't looking necessarily for insurance, but they're self-insuring. It's a point I touched on before. You've got to understand your posture, to understand where your risk lies, to understand how much money to set aside to self-insure in these situations, and to be able to confidently do that, to truly understand your risk, mitigate, and be able to recover if the worst were to happen. That's an important point. Understanding what to bring back first. What is your most business affecting kind of, how do your applications that are running your business connect to your infrastructure, connect to the people that are owning those? That's other really important things that, especially if you don't necessarily have cyber insurance, that you need to make sure you can recover really quickly without necessarily the extra money and the support that would come in and come along. That's something that we found is really important when analyzing the risk and making sure that you can understand that and understand every single day what your risk is, and so you can adjust kind of how you're self-insuring based on that.
Yeah, that's it. And what I usually advise the clients is keep it simple. First of all, look at your busy periods of trade. So for example, an online retailer is a really easy example. Black Friday, Cyber Monday, they're going to make a huge chunk of money over that weekend. Could even be substantial enough to be a couple of percent, if not 10% of their annual revenue. So if you were to suffer a denial of service attack over that period, what is your loss in revenue? Well, that's quite easy to quantify. How long will it take you to recover? What does your business continuity plan say? What does that test say that you've done running through all that tabletop exercise? And in just looking at the revenue alone, you have a starting point. Then you can try and guess what the other costs are going to be. But it is a fun, it's a hard thing to gauge. But look at the loss of revenue, and that's at least where you can start. And I think most businesses get an idea and go, okay, that was more than we thought. And then just look at other busy periods as well throughout the year.
So good. I feel like I could talk for hours about this. So much in there, and so much more to expose. I think for many listening, they might be thinking there's so much complexity on the other side of the quote / policy. and trying to figure out, well, how do I translate what I see visibly there and which is abstracting everything behind it to where I can then do something about it on my side. So maybe we could wrap with some a simple tip from each of you, perhaps driven by another customer story that says, if you just invest in this one thing or think about this thing in this way, you can make that journey to getting the insurance that you're looking for. So Nathan, I'm gonna start with you.
Okay. So I would say the key control is multi-factor authentication in those areas that I mentioned earlier. There will be legacy systems that you can't put it on, so it's what you can do control-wise around that. But multi-factor authentication, the simplest way of saying no MFA, no cover. The second thing, just talking about complexity of cover and wordings, sit down with your broker, and a lot of the insurers are doing onboarding calls now to make sure that you understand what you need to do in the event of a claim. But nearly every insurer has a 24, well, every insurer has a 24/7 365 number. Every insurer has an email address which you can email claims in, and it's picked up by the incident response team. And then they also have web portals as well. Some insurers have gone even further to create web apps, but understand where that fits within your business continuity plan. Most policies have a waiting period before they start paying business interruption losses. When you think you have a claim, you should phone the insurer immediately, but you can actually activate your own incident response, because a lot of policies have a retention, which means you're responsible for that first lot of cost anyway. So you can go through your incident response and just say, look, we're going to try and close it. You've notified them, but it might not be a claim, which is good. But then they'd be there if something has gone wrong, and then they can help and the policy can kick in. And then, yeah, the second thing is, if if you don't understand how your policy works, sit down and ask your broker, how does this insurance policy work? Or bring the insurer on the call, and they'll be happy to tell you in detail, this is what a ransomware claim would look like in typical services and how we would go through that. This is what a data breach looks like. This is what we've done for denial of service claims, which are increasing. The record's been broken a few times this year already. I think there's something big on the horizon, but other people keep telling me there's not. But yeah, policies can seem confusing, but sit down with the broker or the insurer and we can make it easier and less complex. And that's not just for the IT team, let's make it for the whole team as well. And some of the insurers are offering tabletop exercises to introduce you to partner vendors in the event of a claim. But again, some wordings do allow you the freedom to use your own incident response team as well. You do need prior approval, so just double check which one it is, whether you have to use their panel or you can use your own. But as long as the rates are pre-approved and it's a brand they recognize, you can use your own teams as well. So that's just what I would recommend.
What I'd say is try to get the basics in place. So understand what assets you have on your network. Make sure they're covered by the controls you think they're controlled by, and make sure those controls are performing in the way that you think they are, and do that through measurement and metrics. And if you're not sure on the best measurement and metrics, there are recommendations out there that you can find either through the insurer, they're happy to guide you, or through other best practices. So that would be mine. Make sure that you have what you think you have in place to protect your organization.
Nice. And I'll add my, excuse me, my 2 cents here. And it's something that I often say. I don't know how likely it is that CISOs have this power yet, but we have to mitigate the risk because we've exposed things. So if you don't want to pay for a large loss of data, don't collect and store a large amount of data, right? If you don't want to deal with patches that don't get put in place, don't run risky systems that require you to put a bunch of patches in place all the time. I think there's an opportunity for CISOs to say, if we can just reduce some of the risky behavior and reduce the exposure, we can then present a better story to the insurer and the brokers that they're helping them get that insurance. So I say start with the end in mind, reduce as much exposure as you can, understand your story so you can communicate that to the insurer, and hopefully the quest will be won. So
Indeed.
Charlotte, Nathan, thank you for this conversation. Thanks everybody for listening. I'm going to pass the mic back to you, Charlotte, to bring us home.
Yeah, thank you very much. So, and with that, thanks to you as well, Sean. I hope everyone's enjoyed the webinar, found the conversation helpful. And be sure to check out the attachment section where you can download the 2022 Cyber Insurance Market Trends Report if you want to know any more information. There's lots of good stuff in there. So thank you very much and enjoy the rest of your day.